Hello and welcome to another Major Market Movements End of the Week Market Review for August 28th, 2015. I'm Quad G, and in this video we're covering the peripheral markets, the stock market, the commodity markets, energy markets, and we're going to start off here with the Dow Jones, and wanted to give you my take on where I think things are headed at the moment. This does look to me like we have a wave A, a wave B, and now a wave C, which may or may not have been completed. I do think there is 5 waves up, complete with wave 5 basically a truncated wave. I think that's a possibility. This structure right here, take a mental snapshot of that, and then we're going to go back to a few other bounces that we've seen recently. And I think we're right about in this window here. We've bounced up and we've kind of stalled right here. And also, this is another prime example where the market bounces up, stalls, and then starts to resume the trend downward. So I think that may be the kind of action we're looking at. If we go to a daily, I can show you also here and back up. So we've got basically 2 days of uptrend, and we close out basically as a small bodied candle, and that could be a bearish harami. Of course, we won't know unless we won't confirm that unless on Monday we come down here and close below the opening candle here, and that open was at 16,285. So if Monday we come down and close below that, that should confirm this harami, and that top is in, and then we start to see some follow through to the downside from there. So we got 2 days up, stalled. You see here we've got basically 1, 2, 3, 4 days, small bodied negative candle, stalls out, and then a plunge. Here we've got 1, 2, on the third day we stall out with another harami, or it's almost a dragonfly dragonfly doji there, a small bodied candle, and then we get a top and it starts to slide again. So I think that's a distinct possibility that maybe we've stalled, and we may start to buckle down from that point forward. Not on this chart, but the chart to come, I got some more to show you. This trend line here is obviously a key level resistance as well. It's been tested once, twice, 3 times. Rule of 4 breakdown, comes down, and now it's possible we could come up to back test it. If this fails to stall the market and create a reversal, we could drift up a little bit more to possibly back test that trend line. That would be the next point of resistance to consider. Let's see, on the green is the 20 DMA. That's another key point of resistance. You can see back here, this top and this top both respected the 20 DMA. If we were to move up a bit higher, that 20 DMA would be another spot to consider for resistance. Now, and on this weekly, we get the weekly hammer candle that looks very bullish, except I'll show you here in a minute some other things to consider with this. This may not be all that it's cracked up to be, and I'll show you why here in a minute. And the EWO, no positive divergence there. That's going to take at least one more lower low to consider that. And we are getting an oversold bounce, that's for sure, off of hitting the 20 level in the RSI, but no positive divergence there as of yet. The MACD weekly, wide open to the downside, and the daily, wide open to the downside as well, though the histogram bars are shrinking, meaning some steam has come out of the downside. So overall picture for the Dow, I do think there is potential for some topping action here and a reversal next week. If it continues to sail on a bit higher, there are some resistances just a little bit higher that would be key levels of resistance as well. May or may not be able to tag those. Those are currently up here in the upper 16,000 handle. See the 20 DMA, that's right at about 1706 or 088 maybe, and it's steadily coming downward. So those 2 points may form a cluster of resistance, maybe around the upper 16,000 range. Let's take a look at crude while we're here. All right, so crude, clear, impulse to the upside, kind of a stealthy charge upward. Either one of these bottoms didn't really give us any really super clear signs that it was ready to surge higher. On the daily, we zoom in here, there was no signs of reversal candle at all. So it's kind of a stealthy jump up here, and we have established, however, a clear 5-wave count. 1, 2, 3, 4, 5 to the upside. So it's very possible we could get a 3-wave correction, maybe come back and fill in some of this manic jump to the upside, maybe come all the way down here to 40 again. I think that's a possibility. But on that pullback, we'll be considering an entry for the long side, because this is a standalone 5-wave move. So it's possible there's going to be it's going to require at least another impulse to the upside at a minimum after we get a 3-wave correction. So we'll be looking for that. We've switched around here. We've come right back up above the 20 DMA very quickly. Didn't spend any time there at the 20. We may come up and touch the upper Bollinger Band before seeing another rejection and push right back down. And on the weekly, we've got a very bullish outside double key reversal on the weekly, setting a very key low at 37.75. Could that be the major low before a major surge to the upside? Possibly. It's not altogether certain, but even if we did get a lower low, that wouldn't be so bad. And I'll show you here in a second why. Wanted to look at, do a quick history search. See here, here's another hammer candle. Well, here's a very large hammer candle here. We popped up for a little bit, and then it dropped back down for a slight lower low, incremental low, producing another hammer candle before it surged up higher. So the weekly hammers aren't bulletproof. Here's a weekly outside key reversal, and that's set a significant low before it started marching upward. But I wanted to come back here to this 2008 low. This is a very stealthy bottom as well, as there wasn't any super clear weekly candles. There was a small hammer right here before things started to take off, but nothing that really stood out on a weekly basis anyway. So let me back this out. I think it is possible still, even with this bounce, to maybe come down here a little bit further. This could be an A wave down. This is a B wave up to here, and then we've started a C wave down. And C does have the potential of eclipsing retracing the B wave up 100%, and then some, possibly make an incursion below the end of wave A, all the way down here at 33. So that possibility is still on the table, but even with that, we've got a very convincing candle here. So I think we'll be watching in the days ahead to see what kind of attitude we get to the downside. And if it looks like a clear through wave correction, then we'll be looking to get long for at least one more pop-up, and maybe it's just a three-wave move to the upside to scrub off some of this bearishness before giving another shot to the downside. This could be a sub 1, we might get a sub 2, and then come down here to sub 3, maybe to 33, 34, pop up into wave 4 for a little while, and then come right back down, maybe into the final fifth, slightly below 33, maybe later on in early 2016, which is another, in about, February, March is typically, well, January, February, March is typical seasonals for major lows in crude oil. So that's another distinct possibility I see. Okay. Obviously we've had this positive divergence building up, and we're starting to see the fruit of that start to pop up here. And seriously oversold levels into the 20 on the RSI, and we get a pop up. And I think it's possible we could come up here and find some resistance right at the 60 level, and then see it batted back down. And the MACD is open to the upside on the daily. Weekly, however, is still open to the downside. All right. So in the short term, at least, and maybe even midterm, I think we could be starting a significant bounce here, at least. Maybe into subwave 2, considerably higher, maybe into the mid 50s. But from there, we could double back and come right back down yet again. So we'll just have to watch and see. For now, I do think it's possible we could top out here fairly soon, and then come back here and maybe down into the 40 levels, find the end of a three-wave correction for another bounce thereafter in the days ahead. So be watching for that. Okay, let's move on to the Elliott wave charts here. All right, so here's the Dow Industrials. We've wanted to point out this. We had way back here in 2012, going into 2013, we had this key resistive trend line that was tested once, twice, 3 times, rule of 4 breakout to the upside. It was also a point of recognition for the Elliott wave count, and with on top of all that, we got a clear breakout of the 2007 high at 14,000. So 14,200 roughly. And this orange trend line looks like is where some investors are stepping back in here and looking to buy it up and see if they can get a bounce out of it right there at that trend line. Will it hold? Maybe this is just a back test before we cruise on further. That's certainly possible. I got a couple other ideas for you. If this does break to the downside, I think the next point of key resistance is going to be that 2007 top right there at about 14,200, which just so happens to be the point of recognition and breakout point for that orange trend line back there at about 14,000 or so. So I wanted to point out, some people are saying they've never seen a weekly close like this before. This is rather amazing. Well, it is. It's a very strong, big hammer candle, and we've seen other examples of smaller hammer candles in the past that have created a large bounce to the upside, as you can see here. Once, twice, 3 times, boom, boom, boom. Could this be another one? Sure, absolutely. There's nothing really standing in its way that I can see. But before we get too giddy about that proposition, I want to point out to you this scenario. Back in 2007, or 2008, excuse me, we had the trend coming down, and this was right here at about mid-September, right about the Lehman Brothers crash, which, hold on a minute, let me go to the daily real quick. Or not Lehman Brothers crash, but the Lehman Brothers bankruptcy announcement. I have to go back here in history a bit. Here we go. So Lehman announced bankruptcy. I think investors are thinking, well, this maybe this was all this move to the downside was selling the rumor, and then they bought the fact, thinking, wow, this is okay. All the bad news is over with because we got our formal announcement, and it's actually a good time to buy the fact after the sell down in the rumor, and so they got a nice juicy bounce here for the week, which ended on the 19th. All right, so Lehman's announcements was on the 18th. They got a bounce, fall through onto the 19th, and then went into the weekend close and opened up down on Monday the next week. Okay, so keep that in mind. And then about 2 weeks later, now let's go back to the weekly chart. So this is the infamous Lehman announcement bounce, okay? And it closed as a hammer candle off of a lower low. And so if you thought, wow, okay, if I remember back correctly, there was lots of announcements, lots of recognition of this bounce as being, wow, potential turnaround. And this particular candle from the open to the bottom was about an 8% incursion to the downside and a rapid move right back up. And this candle, actually, that weekly candle was actually bigger than the candle that we got this week, which is really only on percentage terms, not in points terms, but percentage terms, which is really most important, is only 6.5% from the open to the bottom, and well, open to the bottom is 6.5%. We've obviously come up and exceeded that, but look what happened. Let's go back here again. 2007. I think this is a very distinct possibility, especially if with that stall we see this week holds as resistance. We could see next week come down and maybe get a little bit of a bounce, and then the second week we start to see capitulation. And once that week comes down and closes below the hammer candle, boom, you get massive capitulative fall through to the downside. And this, for you that are interested in the Shemitah cycle, this was the start of the Shemitah 2 weeks after the Lehman hammer candle, if you will. Okay, so let's fast forward to 2015. That was in September. Okay, and here we are again going into September, and we don't have any formal announcements like the like a major banker or major bank or brokerage firm going under, anything of that sort. But we do get this massive weekly candle. So the thought is, if we stall and next week comes down, maybe back into the 15,000 level, we might get a little bounce up, and then by the time the Shemitah hits, right about it's on September 13th. It's about a couple weeks from now. It's actually on a Sunday. By Monday, we could see a double black Monday, maybe. Maybe by that week we'll have closed below this weekly bullish hammer candle. And just like I've told you guys before, anytime a hammer candle is, or any kind of bullish candle that for that matter is spurned, it sees an incursion below it. It's often very bearish, and you can see that here as well. As we had this hammer candle here, and that did see some follow through, but then it doubled back. We got a close below it right here, and then it started to fall apart. So hammer candles were successful back here. Maybe they're not so successful on this downside for producing the expected bounce. So anyway, key level of support, obviously, going forward is right here at this low, 15,370. And I would suspect that if that is broken in a couple weeks, possibly, maybe September 14th or so, it's very possible this could plunge even further than we've already seen it plunge. Obviously, I think a test of the 2007 high at 14,200 is certainly a possibility. So there's a few thoughts for you. Let's take a closer look at using the intraday on YM. Again, we see 1, 2, 3 days up, and then we stall. Today's action on YM is actually a hammer candle, so it's makes for a possible bearish hangman candle. If on Monday we come down and close below that low in YM, which that low is at 16,465. So that's a level to pay attention to. Also, let's see. Also in YM, you a very similar pattern. You get a couple days up, stall, and then it tops out and falls down, creates a lower high. This here we came up 1, 2, 3, 4 days, stalled out with a small body candle and dove down. Same thing over here, surge up, candle bodies start to shrink, become small, a big pause, and then a dive to the downside. So we could be getting the same kind of action right here and now. So I think if that's true, coming next week, we see a drop back down into the 15,000 level, maybe another pop back up, and then right around on September 14th, right about here. Don't have that drawn quite like I had anticipated. Let me move this just a bit. We can get a small bounce up here, and we'll move this leg over a bit. So I think we could break that very key low at 15,285 and start a larger slide to the downside, possibly right here at roughly around 911 or 914. It's an interesting coincidence that our will be 911 is right there, very close to that very key date as well. In case some nutballs out there want to stir up trouble, 9/11 seems to be the day for that. So we'll have to watch and see. Pythagoras had a question about the Chinese markets, and I'm looking at Shanghai because I think it's one of the better accounting indexes in China, and I do think the run up from 2005 into 2007 was possibly a major wave 1, and we've got a standalone impulse to the downside for wave A, and then over the course of many years we've gotten a 3-wave corrective move to the upside, A, B, C, for a B wave, and now we're working on a C wave to the downside for a major wave 2. I see, from a historical perspective, I do see China as kind of like the late 1800s, early 1900s in the United States of America, where the country was really coming into its prime with the Industrial Revolution, and just major amounts of wealth being created in the United States, unlike really the United States even today, really since World War II to today, you could be really impressed at how much wealth seemingly the United States has generated from World War II and onward, but in a lot of respects, it's not as strong as the amount of wealth that was created from post Civil War into the Great Depression top in the 1920s. So that span of American history, I think, generated more wealth because most of those funds were actually backed by gold at the time, while we stopped the wealth that the perceived wealth that we're seeing most through the 20th century was actually came off the gold standard in 1970s. Well, if you want to consider the metal standards, gold and silver, really from the 1960s onward, um, we've been our perceived wealth has been in fiat terms, which, in my opinion, is not real wealth. And because if you look back at that time, that's when the United States really started to go into massive amounts of debt. Um, once we went into onto a fiat currency. So yeah, the skyscrapers and the neighborhoods and the track homes and the big fancy beautiful cars and everything are very impressive to look at, but what you don't see is underneath that very shiny veneer is a core of massive amount of debt. So it's not, you can't really say it's real wealth. It looks like real wealth, but with that amount of debt, it's really not. So anyway, let's carry on here. Enough of the history lesson. Um, so anyway, I think that China, yeah, this is stepped into its prime here and has ended its industrial revolution phase. So this is approximately 1920s United States of America, and now it's starting its correction down into what would be probably keep on going into what would be considered the tail end of World War II, but in the case of China, it may be the tail end of World War III. We'll see what happens, but we do have a major 80-year major war cycle, 80-year cycle about to start in the next few years, right around 2020 or so, give or take about 5 years. So yeah, major war cycles coming up, but we may see a correction down. This may be the equivalent from wave B down into C. This may be the equivalent of the Great Depression plunge in the United States stock market from 1929 down into 1932, 1930 or 1932, 1933, roughly. So. Um, With that said, let's zoom in on this, get an idea where I think we're at. I do think we've got a wave one down complete. This is a weekly scale, by the way. Let's go ahead and go to daily, zoom in on it. We got a wave one down, wave two flat, and then we got a drop down. I think this is a subwave one, right about here. Oh, excuse me. Okay, so I think we could be working on a wave one here. The wave one could be here. I think it may be a little bit lower for subwave one, and we could bounce into a sub two, maybe into mid-September or so, and then a wave 303 to the downside could be seen thereafter, and it could be a even larger plunge than we've seen already, which most people would be flabbergasted, but to witness. But do want to point out that this whole run to the upside never got back tested after this breakout all the way down here at about 2164. So I think it's entirely possible that you'll see this drop come all the way down here and maybe back test that trend line way down here in about 1880. That could be a wave 3 completion, and then we see another bounce into wave 4, and then from there we start to trail off down into wave 5, and wave 5, I don't want that. Let's go back to the weekly. So we could see wave 3 complete, maybe right around here, maybe all the way down here to the 2008 low, and then people get really excited thinking it's a double bottom. Yay, happy days are here again. Woohoo, we're gonna get a bounce. Sky's the limit. It's all better now. But actually this will just be a wave 4 bounce. I'll go up for a little while, and then another drop down for a final fifth of CF2, which could be all the way down here into the lower 1000 level possibly. So basically washing out this entire shot to the upside, which is very manic. This was just really uncontrollable, ridiculous surge to the upside. So it deserves punishment for being so radical, and so this is the punishment time for that thoughtless move to the upside. All right. Okay, I gotta get moving along here. BKX, again, here's a major wave A, came all the way down here in 2009. ABC up for B, finished. We've got a long ways to go, folks, down to wave C. So if BKX is moving down, more than likely the stock market's going to be right alongside of it for the most part. And really, this is a huge non-confirmation too. The stock markets has sailed to new all-time highs, but what has the financial financial backers of that surge? What have they done? They've barely moved. They're still working on a lower high, while the stock market has gone to higher highs, well above in their 2007 highs. So major non-confirmation. This should be, the BKX was making higher highs back in 2007 along with the rest of the stock market, and but ever since, no go. So that to me, huge, major bearish divergence between the banking industry, which is really the support structure of the stock market, basically controlling liquidity, controlling credit. They're not doing so hot. And I don't think they're going to continue to be hot, and they're going to start dropping off here. So closer view of BKX, we got wave 1, 2, 1, 2, 3. This is a fourth wave bounce. It may stall right there at the 50% Fibo level and turn right back around and start a wave 3 of 3 to the downside. Here, going into the bond market now, 30-year bond, we've got this week, sees an outside key reversal on the weekly. That's a very strong reversal candle. We've seen other weekly OKRs in the past that have been responsible for some significant tops. This one here, outside key reversal, almost a double. This is an outside double before a major plunge. So I'm looking at the possibility of a major plunge there too, especially with the Chinese starting to sell off their bonds to help support their market. As the stock market exchanges in China continue to melt down, I think they're just going to start ditching treasuries at a frantic pace, and that could start to force the price of bonds to the downside very quickly. From a fundamental perspective, which you know what I think about fundamentals, they're not always so great. It's better to key off of the technicals, and this is clearly a very strong technical signal. So we'll be looking for a bounce next week possibly, and look to get short again and watch for a major plunge. This is a 10-year note. Not quite an outside key reversal, but I guess you could call this a very strong hammer candle to the downside. Again, the two basically roll with each other, so I think it's possible maybe we'll get a bounce up. Look for a shorting opportunity again, and then watch for a slide to the downside. We do have, I don't have this a full count, but this is a wave 1, 2, 3, 4, 5 for an ending diagonal. We got wave 1 down, wave 2 up looks complete. Now we've got wave 1, A, B, C, complete for wave 2, and now wave 3 of 3 to the downside ahead of us possibly. I wanted to give you a quick look at sugar here. We do get an outside key reversal on the weekly for sugar. This coffee was, that's not really accurate. This is sugar SB1. So outside key reversal that sets a tradable low at 1013. So it is possible we could get a turnaround here. I think it's worthwhile if we do get a pullback to jump in on it. Want to take a look at sugar on the intraday. This is one chart I could dig up really quick for you. Public domain chart at finviz.com, which is a great site. Definitely recommend taking a look at it. So far we've got just a 3-wave move to the upside. So wave 1, 2, 3, possibly a 4 working on right now. Maybe a 5th wave to come up. Maybe fill in this manic drop right here. And then we might get a 3-wave correction down. And that would be a prime time to look to get long in that market. Also, I want to take a look at the seasonals in sugar. Seasonals often find a major bottom in September, and we're coming right up into it. So yeah, we'll be looking for a bottoming, good potential for a bottom here right in September, and then enjoy a nice surge to the upside. All right, skipped one here. Here's coffee. Same kind of thing. We're getting really close to a bottom here, I think. We do on a weekly basis in coffee. We got a small hammer candle there. Not terribly strong, but it may do. If we don't have a bottom here, maybe one more incremental low to test this 116 level, which I've talked about before. That's a possibility. And here's coffee in the shorter term. From their most recent low at 120, we've got what looks like an impulse to the upside with a wave 1, 2, 3, 4, 5. Now we're starting to drift off very slowly and very choppy, so this could be a subwave 2 starting to develop. I would prefer that it come down and fill in this gap right here, right around 121 to 122, somewhere in there. I would like to see that filled maybe next week. Look to get in on the bottom side of that and then see if we can't get a wave 3 to the upside. Again, if 120 is taken out as key support, it could drift a little bit lower into that 116 level, and then we'll try again for another bottom. Again, the seasonals are supporting a potential bottom here. And if we look back on sugar in the last couple years, here is September in 2013, and we see a bump to the upside. Here's September 2014, a very large bump to the upside. So yeah, September is a good month to be looking to get in long on sugar. So been waiting a long time for this. Shoot, since last year I think we started dabbling in this market. So watch for those signals. They should be coming up pretty soon. Let's take a look at coffee. Again, the 116, excuse me, I'm getting the two markets confused. The 116 in coffee, another key level of support if we don't get maintain support right now at the current low of 120.45 or 117.05 according to this is 117.05. So very close to a turnaround here, I think. The seasonals in coffee, let's look at that. Seasonals in coffee, usually September is generally a weak month into October. But if we go back in time, let's see, September, this particular bounce came out of late September. Boom, up there. October was generally a weak month back in 2014. 2013, we saw September didn't give much of a bounce at all. It went down lower into actually November before it created a major bottom and started a rally to the upside. So somewhere between, I would say, September and November is going to be our time to see coffee turn around here. Okay, so we've gone pretty long here, also about 40 minutes. So trying to keep these segments to a minimum, right around a half hour or so is my preferred time. But that does draw us to a conclusion. So I wish you all a great and wonderful weekend, and we'll be talking to you later. Adios.